Hello, everyone. Good afternoon, and thank you for joining me again for another part of my series, Surviving COVID-19, a Financial Perspective. My name is Nicole Horton Johnson. I did promise in my last video that I'll be talking about the CARE program. However, I will defer that discussion until next Tuesday when I'll be going live with a special guest, which you'll know who that is in a couple of days. So I'll be having a guest and we'll be talking about the CARE program live on Facebook next week, Tuesday at 8. So remember to join us at that time. But since my last video, I have been getting a lot of questions, tons of questions from persons about moratoriums because I spoke at length about the offerings of a number of financial institutions and all of them spoke to moratoriums and deferrals. Persons have been saying, Nicole, will my interest be frozen? Would my loan period be extended? Do I need to pay additional principal? And the questions, they were endless. So I decided to do this video to put all your concerns to rest. Now, moratorium. What really is a moratorium? Well, in its simplest form, a moratorium is really a payment holiday or a payment break. In essence, it's the length of time that your institution gives you to pay back your loan. So if you get a 3-month moratorium starting March, your payment holiday period would be April, May, and June. So you start paying back in July. So that's primarily what a moratorium is, a payment break or a payment holiday. Now, there are some things you need to know about moratorium for you to get a full understanding as to how it works. And I have 4 points noted here, and I'm going to outline them to you. The first, the cost of deferring your payments or the cost of pushing your payments to a future date is substantially high. Whilst a moratorium might be enticing, and that's second, it could add a significant burden to your interest. Because more than anything else, a moratorium affects your interest payments. Third, a moratorium is not a waiver. This is not a free holiday, right? All the banker is saying to you, don't pay me now, pay me at such time in the future. So it's not a waiver. You're not exempt from any interest payment that has been accumulated at that time. It is simply that the loan is put off or postponed until a later date. Great? Now, fourth and finally, what you need to know is that a lot depends on the age of the loan. Yes. That's a very important thing to note. Now, let me use an example. If you take a loan in January 2020 and you are requesting a moratorium or a holiday payment in March, you would just be probably 2 months into the loan. So your interest payments would be significantly higher because most institutions charge on the reducing balance, meaning that your interest depends on the balance of your loan or your principal balance at any point in time. Now, if you had borrowed 3 years ago, your interest payments would appear much less because the interest is being calculated on a lesser amount. So when you think about applying for a moratorium, you need to ask yourself, how aged is my loan, right? If you got the loan recently, you're going to end up paying more interest. If it's an older loan, then the interest would have been less. So those are the 4 things you need to know about a moratorium. Now, there are also some other points that I have here that you should note. And I want you to listen very carefully. Ladies and gentlemen, use or capitalize on a moratorium if and only if you absolutely are not able to pay your loan. First, a moratorium is not a break. It's not a free break, but it's deferred. and I'm going to read it directly from my script here. This means whatever interest accrued during the payment break must be paid at the end of the period. So answering your concern, one of the major concerns, will interest still be accumulating on my account? Yes. If you apply for a moratorium, interest will still be accumulated on your account over the period. Now, institutions can decide if they want to give all their customers, or it's done by application process. It's not automatic anyway, right? And sometimes the institution can assess and say, I don't think you need to take a holiday payment because you're not in such a financial bind, right? Now, another question that I've received is whether or not your loan payment will be extended. Yes. If you were granted 3 months moratorium, your contractual payoff date, that is the date that you would have closed the loan entirely, will be extended for those 3 months. So if you request 2 months payment holiday, your contractual payment date will be pushed by 2 months, pushed further out. So you say, for example, you were supposed to close your loan in January 2020 and you applied for 3 months moratorium. Your contractual payoff date will now be February, March, April 2020, right? So it has an impact too on your contractual payoff date. And by default, it means at the back end of the loan, you'll be paying a little more interest because guess what? You have the loan going for 3 more months, right? Good. Now, what I want to implore all of you guys, please do not, and I repeat, do not use this benefit for credit card. Credit card interest in Jamaica, it ranges from anything in excess of 30%, right? Now, I have a document here that I was looking at earlier. If you take a moratorium on your credit card payment, right? That means you are allowed a break. You are allowed to pay that credit card at a later date. However, whatever interest you would have accrued for the period, it's still there and it still needs to be paid. Another thing you need to know as well is that when you take a moratorium on your credit card, say you take a moratorium for the month of April, but during that moratorium period, you are still swiping a card, you're still using the card. Ladies and gentlemen, interest is still being charged on the card. So you end up getting squeezed both ways. One, you still have to pay the interest for the period up to that point, plus whatever you use whilst on the moratorium will still become due and payable at such time in the future, right? So keep in mind, ladies and gentlemen, moratorium is a postponement and not a waiver. Now, that is the dark side of a moratorium, but it is not all doom and gloom because it serves its purpose. Honestly, it does. One, it can help to ease financial stress from income uncertainty. Now, for those persons who may have lost their jobs or were laid off, the reality is you don't have the fiscal capacity to pay your loans and credit card now. So by default, you might be forced to request a moratorium, and that's absolutely fine because you absolutely need it. You need the break, and it's a good instrument to keep you afloat. So if you are in that category of workers, for example, hotel workers, persons in the tourism sector, and other industries that would have been affected severely, moratorium is for you people. Ladies and gentlemen, if you still have a job, if you still have money coming in, I would rather to say to you, cut your household expenses and pay your loan, but do not do the reverse. Don't cut your credit payments in favor of personal expenses. It can be detrimental, right? Now, if you are one of the victims of the outbreak, in terms of you have lost your job, a moratorium is in fact what we would call a godsend. and it's something that I would advise you to take up on because you need the break now. And the good thing about applying for a moratorium is that it won't allow you to fall into default, right? Because once you approach a bank and they approve it, what they'll do, they'll edit their system to say, do not request a payment from this member until 3 months time. And in effect, that won't affect your credit report. But if you sit home and say, I'm not going to apply for a moratorium because Nicole did say that, boy, the interest is going to be this and it's going to be adding up, then you're going to be flagged as a delinquent member, and that has serious implications for you in the future. I think in one of my videos I did mention that a bad history follows you for 7 years. So if you are hit severely, if you don't have a job, a moratorium is for you. If you absolutely can't find any way, borrow from a relative, spouse, and if none of that can work for you, then go into your bank and apply for a moratorium. But yes, enlightening your darknesses, I'll say to you, there are interest implications as well, and I'm going to go back over the 4 steps that you need to know about a moratorium. And I'm going to read it straight from my script. The cost can be high for deferring your payments. There's the burden of the interest to be paid at the back end. It's not a waiver, it's just a deferment of your loan payment. And you need to ask yourself, is my loan a new loan or an old loan? Do I have a high balance or a low balance? Because that will have implications for your total interest payments. Now, what I'm going to do, since I don't want to make a long, I didn't want to go over 12 minutes on my video, I'm going to do a short video following this, giving you a real life example of exactly how moratorium is calculated. I'm going to use real figures, and I'm going to explain to you exactly how that works. So look out for my next video in a minute or two. I'll show you exactly how it works, dollars and cents. Thank you for joining again, and see you in my next video.